when each one of us does a thorough analysis, you realize that there are risks. If I begin with businesses, and I want to speak the small businesses. You know, the big businesses have, probably we can say they have enough buffer. Yeah. They have stopgap measures and a fallback position. When you look at a small business, a small and micro enterprise, there is usually no clear distinction between the owner and the business. When the owner is sick, the business is sick, because probably it will not open that day. Yeah. And when they pass on, then the business has also collapsed. Now, there are so many things that are affecting small businesses. And when you really examine, you realize that most of those things which bring down these businesses could be insured. One of them is theft, fires, the workers running with the money. You know, you are bringing things from Mombasa. There is a breakdown of the vehicle on the way. All those risks can be insured. But also the sickness. Actually, sickness and the associated costs happen to be one of the key drivers of business costs. The sickness of the staff. Now, all these are insurable risks. Now, the consequences of not having insurance is that when each one of those happens, then the proprietor has to dig deep into the pocket, get money, some of which is capital, to take care of those challenges. Now, that necessarily takes them down to the bottom. You see, some people think that insurance is expensive. The way insurance works is such that I am asking you to give me some small money, but I'm giving you assurance that if something of a bigger magnitude in most cases happens, I will be able to take care of that.
Despite the cost.
Exactly. If I give an example of a motor vehicle, if you have a motor vehicle, motor private, we just take 4% of the value. But we are guaranteeing security of 100% of the value. So you do a cost-benefit analysis. Is 4% more expensive than the 100% just in case something happened? And these things are not new. When I switch on TV every day, I see accidents happening. I see fires.
So it's something you can anticipate could happen. Yeah.
It is something that you can anticipate. Fire could be probably 2% of the value of the property that you're insuring. You're just putting 2% of the value to cover 100%. So to answer your question, the consequences of not insuring is actually the cost of covering the risk at 100%, which you would have otherwise given somebody else to cover at 2, 3, 4%. Domestic covers as low as 0.2%. You have your television, your very expensive sofas, and other household equipment. Thieves come and break into, they take. A fire, etc. So, but why don't I put the 0.2% or so to cover my value at home, so that, once I have bought a television, I have bought it. Whether it is stolen, whether it is broken by children, where there are fires, there is somebody. Exactly. So really, it is about appreciating that risks are inevitable, understanding that insurance actually takes just a small percentage in terms of premiums to give you 100% coverage, and also appreciating what my colleague mentioned, that we are talking about a regulated sector. Now, the insurance sector is highly regulated. I know some people, we have come from a past where people thought that insurers actually are a scam, that they don't pay. Our number one mandate is to ensure that insurers deliver on the promises that they make. And to attest to that, when you talked, I'm glad that you have read our reports. You should also have noticed that out of the 1.4 trillion shillings which was underwritten in 2022, close 600 billion was actually already paid by close of year, was paid in claims.
Back to the clients.
Exactly.
Interesting.
So what does that mean? That insurers actually now do pay claims. The regulator's role and focus has been on ensuring policyholder protection. And we are both winners. The public is a winner, the industry is a winner. Because now people have started appreciating that if I pay my premiums and there is a risk that causes me to suffer a loss, there will be a payment. If that payment is not forthcoming, there is somebody I can run to who is the Insurance Regulatory Authority of Uganda.